Welcome back to the floor of the CME Group here Thursday, May 26th. I'm Killer from Treasury Curve. Got cash? Killer can help. Get me at The Killer on my Twitter account or comment here in this video. See if I can help you out with that overnight cash management. We have a great platform. Let's look at this market today. Kind of kicked off to the downside here a little bit initially on the EU junker, kind of talking about Greece. They're talking about possibly not releasing the next tranche to help there. And essentially, the subtitles basically print Greece is insolvent. We've known this for a while. And actually, the market initially kind of came in. You saw the US dollar get beat up a little bit, and they rallied the euro currency up there to 142. Now we've seen it come off there, back underneath that very important level at 141.25. We've seen all the markets kind of take this negative tone today. Now let's drill down 1 second these treasuries. We've talked about this continued grab in the treasury market. They're going for it, folks. They are going for the 3% in the 10-year. You can see it this morning. The yield's about 316. We had a horrendous GDP number. Some people say not horrendous. Some people say it just missed a little bit under 2%. It came in at 1.8%. Let's do the math, folks. It's 2011, May 26. It's 3 years post-crisis, and we did not anticipate to have a GDP number this weak. So here we are with all the headwinds in the market, but really kind of analyzing the GDP and the jobless claims stay weak. We initially saw the market kind of move a little bit off of that, but now we're having a negative tone in the market. I think the key to the S&P today is that 100-day moving average. The 100-day moving average is coming in at 109.75. So we'll see how that works out. But this treasury grab, that weekly pivot, folks, I've been tweeting that weekly pivot. I've been talking about this weekly pivot. It's been phenomenal the 30-year. That weekly pivot has been 124.26, and we have gone down to that level a few different times, tested and come off. Now we're at the highs here in this 125 level, and I think on the chart, if you look, 126.25 is this upside target. Will we get that? We'll see if we get some stops in, but bonds are almost up a point. They continue to grab these treasuries, and yes, maybe there is something coming down the pipe, this QE 2.5, but I really think they just have shorts on the run, underweight managers, and they want to go. This 3% level is the threshold. We'll see if we get it. Crude oil, we've seen a continued volatility. In the crude oil, went up to 102 today, kind of come back down off. And I think as we see it kind of dance around the buck here, we're continuing to look for leadership in the market. We talked about that yesterday. It is just not there. But as this whole Eurozone situation comes, to fruition, I think we're going to see a little bit more volatility this week. However, from a trader perspective, we're not seeing the volume, folks. The anemic volumes is not really kind of making us feel good. But in the event we do see a move to the downside or upside, as long as it's confirmed on volume, we'll feel better. But truly, it does feel like we're going to have a little bit of a reset down here. Maybe get underneath that bucket, that 1300 level, and go to that 1293 level in the S&P. We got a 3-day weekend. And that's the signal here on the floor. 1, 2, 3. Not like this, like my 5-year-old does. It's 3 like this. We have a 3-day weekend coming up here, Memorial Day weekend. So maybe we'll see some portfolios get adjusted tomorrow. Have a great trading day. Talk to you tomorrow from the floor of the CME Group. Remember one thing for the rest of the day: be the hammer, not the nail.